Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content for Tuesday, June 21st, 6:36 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Hope all you folks had a nice 3-day weekend. For the dads out there, hope you had a nice Father's Day. Nice relaxing weekend. Get recharged after all this selling we've had over the last 10 days. Get back on track. Let's take a quick look at futures. Got a nice bounce underway. Bitcoin up 3.3%. Oil up 2.5%. Equities, I'm just going to round it off to 2%. It's bounced around 1.8, 2%, something like that. Nat gas down a little bit, 3%. Copper's up about 1%. Over on the macro front, we've got the Chicago Fed this morning and existing home sales. Tomorrow, we've got Jay Powell, I think at 9:30. He's actually speaking twice this week, and there is a whole barrage of FOMC speakers. I didn't even list them all. We've got multiple people every day this week, so they're going to be out getting their ducks in a row, driving home, whatever they want to say. I'm sure they'll all be in lockstep. But of course, Jerome Powell will be closely listened to tomorrow and Thursday. He's speaking both days. On the earnings front, Lennar Home Builders is already out this morning, and I didn't see a lot else. I think Lazy Boy is after the bell, pretty thin out there, but we do have KB Homes tomorrow after the bell as well, another home builder to watch closely. Diving right into the charts, Bitcoin over the weekend took a deep plunge, got all the way down into this 17,600 area, easily meeting our target, which on this break we had talked about. We had talked about this break way up here at 28,000 measured move basis. Took us to 24, and then our next measured move and support was around 19, and we took a deep look below over the weekend. That has since recovered, but now we've got a low watermark down there to shoot against if you're playing that. Moving on, we've got just a ton of oversold setups on the indicators, and on the blog site this morning I list a bunch of other things that happened over the last 7 to 10 sessions. I mean, a lot of stuff that hasn't happened in a long time. We've got bearish sentiment, highest since 2011. We had 5 of 7 trading sessions last week heading into the week prior. Over 90% down volume on 5 out of 7 sessions. Supposedly, I mean, I didn't verify this on my own. I'm taking it on a leap of faith that the people that posted this information were accurate, but has never happened since 1928. So there's a lot of things like that. When we go to our McClellan oscillators, we're down here. We're not bombed out, but we're down at the low end of the range on the NIMO. If we go to the NAMO, a little higher up, we're down here minus 14, more or less in the middle of the range. But when we go over to the percent above 50, you can see we're down here at, what are we at, 7? I mean, you got to go back to the COVID lows and the 2019 or 2018 rug pull to get down that low. When we go over on the NYSE, same thing. We're down here at 9. It had got down to 2 or 3 in the COVID lows. Back in 2018, that Q4, it got into the same kind of range, 8.5, 10, 15. Back in this was Volmageddon. You remember early in 2018 that happened. So I mean, we're pretty bombed out, ripe for an oversold bounce. As we dive in the charts on the indexes, I'm going to hit you up with where we're at on the weekly just to give you some reference points before we drill down into the lower time frame charts. Here on the SPY, we had come down. We achieved this target here of the 38% retrace of the COVID low. And I think just as a reference point, what you want to see as a nice first move on the weekly chart is to recapture 375. You can see that's the 38% retracement area. Come back up here, recapture that, then that'll give us a nice line right there for a potential, reversal point. And of course, we've got the lows of this week, which were 362 down here as the spike low. Moving on to the daily chart, the thing that's going to make this really, really tricky, we've got a lot of open gaps above that have to get filled. We've got a pretty nice downtrend line here that comes in around, by the time we get there, it'll be down in the 395, 400 area. But keep in mind this morning, I mean, we're coming off an oversold conditions, right? We've had a holiday weekend, low liquidity, a lot of people enjoying that 3-day weekend, not a lot of market participants. Okay, we're up 2%. Great. But now we're going to open up with a 2% gap below, right? What we've really got to guard against is that gap fill lower, that one last sell program for anybody that didn't get their selling done last week. Hard to imagine, but they're probably out there. Come down, fill the lower gap, and then go higher. That's something to guard against. I mean, that's not a prediction. I have no more insight than you do as to which way they're going to break it out of the open. But we do have a large gap above up to 377 that hasn't been filled. And now we're going to have a 2% gap below on the open. So we're going to really probably open in, more or less no man's land. I will say, let's go on to the 60-minute chart. We can zoom in on it. Here's the big open gap above. If for some reason we go down and fill that lower gap out of the open this morning, I think that would give you a really nice objective location for a long once that gap fills, which would bring us down to Friday's close at 35.86, which would be right here. And if there was an overshoot down to these lows at 362.5, I think that would be a great place to get long, more or less a second bite at the apple, as it were, to get in at the lows of last week and then go higher from there. But that's not a prediction. So we're going to have to wait and see on the open whether it's, gap and go off to the races, or gap fill lower out of the open, get that technical check mark of filling that lower gap first, and then rocketing higher after that. Moving on to the Qs. Here, deeper pullback than SPY. Here is the 38% fib level at more or less 310. We've come all the way back to the 50% retracement down here into the 280 area. I think as a simple first reclaim on the weekly, get above 280 and then see if we can make progress back up to the downtrend line that would come in 310, 3. Remember, we've got a resistance zone right here at that 317 to 322 area. So if there is a rally, that would be another place to focus in on. And we've right here, we've got it marked on the daily chart, that 317 to 322 area. We do have the daily downtrend line intersecting way before that. So again, today, we've got an unfilled gap above from last week, and then we're going to have a 2% gap below on the open. So that same scenario that I just mentioned, talking about on the SPY, will of course have really across the board. I imagine almost every stock is going to be gapping up this morning, at least to a certain degree. So we're going to have to guard against the backfill lower, then have a bounce. Moving on to the 1 hour chart, we've got this downtrend line that we had in there. We undercut that a little bit, came up into the Friday close right around 275. You can see that we've got this sizable unfilled gap from last week, and then we'll have we'll open in the middle somewhere, and then we'll have the gap below. Notice that on our indicators, I don't have it marked, but I'll just point it out. Lower low, but higher low in momentum, higher low in RSI. That gives you that bullish divergence on small time frames. Let's look back at the daily chart. What you would want to see to have more confidence in a more sustainable rally is the PPO starting to curl up and have this momentum move to the upside, have RSI start moving to the upside. Because remember, back here, we saw that same phenomenon where we had a big downtrend, and then we got the bull cross in momentum, and that's what gave us this bounce off of the lower trend line. So if we could get that scenario again, we could come up here into the 295, 300 area where the daily downtrend resistance line comes into play. So look for a gap fill on the upside as a first move. And then I think reclaiming this 287 would be an important area. Fill that gap. And then, of course, you can see we've got a lot of volume over price resistance coming in about 297, 297 and a half. And then that would be a big level that would align with the resistance on the daily chart. Moving on to IWM. On the weekly, you can see that we achieved a level that we've been pointing out all along, and that is the pre-COVID highs back here at more or less 165. And I still think, as you look at your charts, no matter what it is, Apple, Microsoft, whatever it is you may be trading, look back at the pre-COVID highs as a benchmark reference level. Some stocks are already below. I was looking at some charts over the weekend, already down, well below the pre-COVID highs. Actually look like they're diving to the COVID lows. So take that pre-COVID high as a reference point. Moving on to the daily chart, we're going to have a gap above right here from about, well, I've got it marked on the next chart, but you can see I've got a minor downtrend line coming in here to about 180. So fill this gap, potentially check off this gap to 183.50, but we do have a minor downtrend line. I think this 190 would cap really any kind of rally that I could foresee. I don't think we're going to be breaking out of this anytime soon. I think getting a move back up to this minor downtrend line would actually be a nice accomplishment at this point. Here's that gap that I was talking about, basically 168.42 up to 172. Of course, we're going to have a gap open. I didn't look pre-market to see exactly where we were at, but we're going to be really gap over gap. We'll have a gap below and then a gap above on the open. One line that I would make note of if you're trading IWM is 169. Why? Because that's where price will have a much tougher time going north, just because of this volume over price. You can see the profile come out, and then tougher sledding as it gets up to 175. Meta got a gap, runs from 166 up to 169, and then we've got a gap above that as well. We had lows down at 160, so if you had gotten long into the in Friday, I think you can use that as your reference point. If you're not long, I would just use the bottom of today's gap, and at worst 162 as a pivot point for higher, and then look for gap fills here, and then an upper gap fill towards that 172 to 176 level. And another thing you could do, I don't have it marked here, but drop your Fibonacci retracement tool from the high right here down to the low at 160. And just by eyeballing it, I would say that that 38% retracement level will most likely come in right around the top of this gap. So that's another little tool you can use to help you in your intraday trading. Here you can see I've done that on this particular chart on Apple, where from high to low on the swing puts that 38% level at right around 137. But you can see here we've got the gap marked. If Apple gaps open higher, of course, we'll be in no man's land. I think an important level is going to be right here at the top of this gap at 135.20. Notice there's a hole in the chart, a void in the profile that would bring us up to that 138 level, and then we'd be in the meat of the retracement area. And we've also got a gap up here at 141. So I think there's opportunity. You might have a slowdown here at 137, 138 because of the volume profile, but then we've got targets above at the 50 and 618 retracement level, and those things would coincide up here at 142.50 on the chart to get that gap fill right there. Tesla. Tesla didn't make a new low, which was encouraging to see for the bulls. Made a little run at the 620, never got there. Finished around 650. Of course, I think it'll be up today, but we've got a nice big gap here from 675 to 700. You'll have to see where it opens this morning, but you've also got a decent downtrend line to reference off of the top that comes in right at 700. If we get a big positive move, say it's a gap and go and it just comes up, you get a break above 675, I would certainly take that long and look for a move to 700. And then if this bounce has legs and you get a break above 700, I would roll everything up, take this trade to the bank, and then 700 will give you a really, really nice level to be long against for two reasons. One, you will have recaptured this level here where you saw all that support. You will have recaptured the trend line, and that will give you dual levels of support to be long against. And then you can shoot for a move up towards this unfilled gap that starts at 743. Microsoft. No real monster gaps until you get up into this 261 area. I think you've got a reference level here at 242, and then you've got a little support here at 246, and then you've got a little gap here. I think the key level this morning is going to be 254. Why? Support, support, bunch of support, support, high volume over price bar. If you can get above 254, I like that long, and I like it long up to 260 at the beginning of this gap at 261. That'll be an important hurdle. Why? Large volume over price bar, resistance, resistance. Here was the gap down. So I think looking overhead on Microsoft, I would be keying in on, first of all, this gap. 254, I think, is a buy on a recapture of that level. And then you're looking for 260 and a move into the gap to 265. Amazon really has a pretty constructive chart. Why? Low at 102, low at 102. Look at all this support at 102. That 102 level has held for a long time. This gap has been filled, but I left it there just as reference levels in case there's some muscle memory. I think an important level on Amazon is going to be 111. Why? Because look at the hole in the profile where there was some fast moves. Not a lot of trading volume took place there. So if we can get a break above 111, I think it can go all the way to 120 on a kickback rally. We've got a gap here in the middle between, let's call it 114.50 and 116. There may be a hesitation there, but as far as this profile goes and where all the price action has been, I think on a break above 111, I think if everything stays constructive, I think this thing could find 120, and that would be a really, really nice trade. This chart looks a lot like Tesla in the sense that we did not make a new low. We really didn't even come down to give this 260 legitimate test. And although this gap was filled last week, I left it in place just as reference levels for in case there's some muscle memory on price. Today, if we open higher, which we probably will, we'll be up in this area. I would treat it exactly the same way as all the other ones. If it fills the gap lower and you come into Friday's close, I think that's a buy against that level. If it breaks above, you've got some reference levels here. I think the big level for Google to overcome is this gap that starts at 22.65. If you could get that gap fill up into the 22.95 area, I think that would be a great trade. Hopefully, you'd be able to catch it either on this gap fill if you're interested, or on a break back above this 2200 where there was some support and you had a prior low back here. So I think 2200 would be a buy, as would 2220 at the breakout from this old gap. It really kind of depends how it opens and how it behaves, in the morning trade. Netflix. Came back down. So we had a double bottom low down here at 163, 163 and a half. We came back up to fill this gap. I left it in place. So just like all the other ones, we've got a reference point with Friday's close. at 175. That'll be the bottom of your opening gap this morning. And then after that, I think the big level to recapture is this 187.50, which has been a level that we've been talking about for a long, long time on Netflix. If for some reason we come back below 177.5, I think that's a good buy on a reclaim as well. Why? You can see this trading range between 177.5 and 187.5. I think if you get a break above 177.5, I think you can get a quick move to 187.5 and potentially even fill this gap into the low 190s. SMH. Notice here, again, we made a new low last week, but it was with positive divergence. Lower low in price, higher low in momentum, higher low in RSI. That bodes well. I think, well, we've got an open gap here from about 210 to about 217. It's a big one. We will open up with a gap. I doubt we're going to be in this gap, but we'll have to wait and see. But I think a reclaim of 210, 211 would be a nice buy for this potential gap fill. And then you can see we've got a gap on top of a gap. We made a run last week about halfway where it got rejected. So that gap remains unfilled. And then we've got gaps even above that as well. So I think this is a pretty nice setup for a rally. If it's going to be a little risk on rally here, I think semis should be a good tell on that, and has the potential to make a nice move. So I really I like this one with the bullish divergence, the open gaps above, and you could even draw a nice little trend line down off of these highs that would give you another reference point on a breakout. So I think I want to wrap it up here just with some thoughts. Oversold conditions, tricky open this morning. It'd be nice to think, oh my God, green light. It looks that way with a 2% gap up. Just keep in mind, super low liquidity over the weekend. We've seen it before where, nothing really matters until the big players get on the field. These little guys over the weekend, it doesn't take a lot of money to push that around on futures. So watch the open. Watch for at least the potential of them making a flash move down to fill that gap. And that would be a big one. A 2% gap fill lower. If you can catch it, if that's your trade, if you're good at reading the opening candles, then that could be a significant move. But I think a more, maybe a more objective type trade would be if you get the gap fill lower and they flush it down that 2%, then you can get long against last Friday's close on that gap fill, and then see if we don't get the bounce back up. So it could be a volatile day. I think the most important thing is have your objective levels marked out here this morning and be ready to go whichever way it breaks. And one last thing before we wrap up. One of the things my old counselor always used to pound the table on is control your reactivity to events that happen to you, not only in your life outside the charts, but your life in the charts. And reactivity, it's not what happens to us, it's it's how we react to what happens to us that really counts. Been a rough couple of weeks in the markets. I'm sure it's chopped a lot. From pros all the way down. This year, you can't turn on the TV where they don't tell you it's been the worst in history as far as different asset classes, the bond market, the stock market. Nothing's really working. Gold's not working. A lot of things like that. So even for the pro, it's been difficult. So don't think that, you're going to be the guy that's all by yourself having a tough time, catching a trend. We're doing okay, but I think there's going to be a lot of opportunities coming up. So don't get too down on yourself. And by all means, if you are down a little or a lot, doesn't really make a difference. Don't try to make it all back by Friday. That's the kamikaze move of kamikaze moves. That's the reactivity my counselor George was talking about. Stick to your process. You're not going to make it all back by Friday. And if you try, that means you're going out on the risk curve and doing crazy things instead of objective things. So keep it real. Trade small, get your confidence back, and then we can rebuild it from wherever you're at. So keep that in mind as you approach trading this week. There's going to be a lot of volatility, I imagine. And with Jay Powell and all the FOMC people talking, everybody's going to have a spin on what Powell says over the next 2 days as they refine their statements and people read the tea leaves and all that kind of stuff. So just stay on your toes and be ready, and we'll see where the charts take us. So if you're new here and you like technical analysis and objective levels to trade against, please hit the alarm bell and the subscribe button for more YouTube videos coming your way. Jump over in the show notes. You'll find a link to add your email address to our list. Join the team, and then morning, noon, or night, you'll get all my content right to your email address. You won't have to hunt for it. So let's wrap it up there. Hope you guys have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.